Paul, tell us about the quarter and what drove this record performance.
Well, a lot of factors. When revenue's up 20% and bottom line's up 70%, it was a pretty good fiscal year. So driving it is basically our growth in our advisors and net new assets at 10% annualized, our advisors' productivity. They're bringing in new clients. They're helping clients through, kind of a scary time as you go through COVID and people wonder how the market's valued. So that focus and that sense has kept our base business really growing, and then we've had a great capital markets year due to all the activity, setting records really in 3 of our 4 segments.
Yeah, and you not only have advisors bringing in new money, but you have the money that is already there growing in a very nice market environment. So, as the saying goes, you do better when the client does better, right?
Yeah, absolutely. It's a lot easier business when markets are going up. And who would have thought, 2 Marches ago when the Feds cut rates twice, half of our pre-tax profits went away almost overnight. To go from there to having all-time records is partly market, but a lot is bringing in advisors, kind of world-class retention of our advisors, which we've been known for, and record recruiting also. So same-source sales are up, and our advisor growth is at, all-time highs. So you add those together, and it's been a very good year with the markets.
Paul, I'm also curious what you think about the Fed's next moves here. So as you read the landscape, as you have kind of a look at just how much liquidity has fueled these high asset prices, what's the next chapter? Are you worried they're going to have to slam on the brakes?
Well, there's record liquidity. I don't know how long you leave this much support in the market. There's cash everywhere. And even us with our record cash, it's only 6% of client assets as the equity markets continue to grow, even though the cash balances have grown. So banks are flush of cash, hedge funds are flush of cash, investors have high cash balances, relative to absolute dollars. So there's a lot of cash in the system. So as long as you artificially keep rates low, you're going to have this impact. So I don't think the Fed, over time, you can't work on stimulus forever, has to start reversing it. Inflation is certainly here and back. The question is how much is transitory, how much is real. But certainly inflation's coming back. And I think most people think over the next few years rates have to go up. So that impacts investing. It keeps equities very attractive given versus fixed income, given if you think rates are going up. And, so I think the Fed has to loosen up because they're a big competitor. They're the biggest securities buyer in the market. It's even hard for us to take our excess cash and buy securities because the Fed's buying, a lot of it in the marketplace. So.
Before we get to the busyness and the business of the capital markets, which you mentioned, let's talk about your cash and how you're deploying it. You've made some acquisitions. Are you actively in the market to acquire money management firms where perhaps because of generational change, those companies are getting ready to sell? Are you doing that, picking up cherry-picking good companies that you bring into your fold?
Yeah, in our business, number one is we're very culturally oriented, so we will not do an acquisition for assets. The culture has to fit. Then there has to be a strategic reason, and you have to do it at the right price because you have to have a return to shareholders. So we just entered in an agreement and got shareholder approval to acquire Charles Stanley in the UK. We've been talking for 7 years, and companies have to be ready to sell, but it's the 4th generation of ownership and management is in that company. And there are companies here in the U.S. and Canada where we operate that have that same criteria, but they have to be ready to sell. We're not just going to buy assets. We buy culture and people that buy into our system.
And what is it in the culture that you look for? That's it's a very interesting answer to me. What is it that you're looking for there? They've got the assets, that's one thing, but the culture is the other.
Well, first, they have to follow our central tenant client first and have demonstrated that. Secondly, we get along inside. It's not, we're competitive to grow. We're not competitive against each other, inside. If you go to our advisor conferences, they lead classes. They tell people how they do it. They don't, they try to help each other, not to compete. And so people like coming to work, and they like working with people. They don't feel like they're in competition with their ally inside the firm, and that's really critical to us.